Good morning, sir.
We proceed to our third lesson for the fundamentals of ABM 1. And for this lesson, I'm going to share a screen to you. Hopefully, you can both see it. By the way, can you try turning your cameras on? Yeah. If possible, can you try turning your camera on? And what about you, Nathan? Show your face, Nathan. Let us see you. It's so lonely. Where have you been, Nathan? Okay. I will now share a screen.
Sir, there's no module for accountancy.
For accounting, Nathan, Ma'am Zen has requested that the module for these subjects be just sent to you through Edmodo since there are only 2 of you in this class. I've already sent the module to the Edmodo. I've already posted it in our Edmodo wall for fundamentals of ABM. I think Nicole has already downloaded it as well. Have you?
Yes, sir.
I'll now share the slideshow. Can you both see this?
Yes, sir.
So this is the scope of our discussion for this week. You have the users of accounting information who will be using the accounting information that needs to be identified, recorded, interpreted, or analyzed later on in relation to business transactions that are happening, economic events that are happening in at a particular point in time for that particular for a certain business. There is what you call as a group of internal users. These are individuals inside the company who plan, organize, and run the business. So they are the ones who are directly involved when it comes to how the business should operate. We call them internal users. They should know the in and out of managing the business, and they're the ones who are also participating in the daily operations of the business. These include marketing managers, production supervisors, finance directors, company officers, and owners. So technically, you can group these internal users into 3. We begin with the management. The management make use of internal information. However, there is a particular need for these information. They need these information because there are decisions that need to be supported coming from them. So what information are needed and what decisions are supported in relation to these internal users known as the management? The management needs to know income or earning for a particular period. The management also needs to know the sales that the business has incurred. It's also right that the management should know the available cash, production cost, that the business, the available cash and production cost that the business has as of that moment. They need these information. The management needs these information for the following decisions. To analyze the organization's performance and position, there is a particular financial statement for that purpose. To take appropriate measures to improve the company results, and sufficient decisions in relation to sufficiency of cash to pay dividends to stockholders. Just imagine this. If management would not be given information in terms of available cash, then they would not be sure whether they should, especially if it's of a corporate structure, they would not be sure whether dividends should be declared, correct? Whether it's practical to declare dividends or not. It would be so wrong on their end to call for a declaration of dividends at some schedule only to find out that there's no available cash. That will just bring about chaos and riot within the corporate structure. That is why the management should know how much cash is available. It's also fitting for the management to know the cost of production, because this also gives them a projection of how good their sales may be, given that the cost of production is set at a particular value. Once management gets to know this from cost accounting, once a production cost is identified, they get to also determine the selling price of a particular item, or the price by which a service can be obtained. And from there, sales can also be found in a trend. See, pricing decisions. The management determines that by, of course, having some knowledge first of the cost of production. Another group of internal users, you have the employees. Of course, the people who are directly involved in how the business is operating should be considered as important accounting information users. They need information, and they also have some decisions that should be supported by the time these information are known. Employees need to know profit for a particular period. Of course, if the profit is not known to them, if they do not get told, or if they do not know the profit, they would feel useless on why they should still continue working. Imagine, I can recall the movie Seven. It's a Filipino movie, 7 weeks. I think it's 7 weeks. Basta, is it 7 weeks? Are you familiar with that movie where you have Agamulak, Ding Dong Dantes?
7 Sundays,
Seven
sir.
Sundays, 7 weeks. 7 weeks.
Mix.
7 Sundays. Do you remember that movie, Nicole? Di ba? The family of Agamulak has a convenience store
Yes, sir.
that has run bankrupt. Di ba? And
Bankrupt, sir.
the convenience store of Agamulak has run bankrupt. However, they still have an employee at that time who has been working for them. However, that employee has not been receiving any salary at all. Diba? That's in the case of the employee. If the employee in fact at that, I think there was a scene in the movie where the employee asked how much the convenience store has already been earning,
The
or if the convenience store has been earning at all. Because if the company is not anymore doing any earnings or receiving any earnings, then the employee might just as well decide to leave and look for a better employment opportunity. It proves to be useless already for that employee to remain or to stay. The employees also they should know this, the information about salaries paid to them. It's not probably a business of one employee to know the salary received by another employee, but that employee should know how much he or she should receive for a particular set of job descriptions, or for whatever task or job is given to him or her. For what decisions? Why should the employee know these information? For job security, of course. Employees work for the purpose of earning a living, to have a secure job. They should also know these information to consider employment of that company, or to look for other employment opportunities. So that's related to the 7 Sundays movie. If that employee had known way before that the convenience store had not been earning anything at all, had not been gaining profit, then it's high time for that employee to look for another opportunity, another employment opportunity, perhaps a better one. The last group of internal users, we term them as the owners. And what information should they need? The profit or income of the period, correct. If you have noticed by now, the management, employees, and the owners should know the income. As internal users, they need to know if they really are earning or not. Because if they're not earning at all, there needs to be some decisions that should be done. Decisions involving improvement of selling or the change of selling prices, improvement of marketing opportunities, or perhaps a change of employees to reduce the number of employees, maybe because they've just been hiring so many that they have not incurred a good number of profit at all. Owners also need to know resources or assets of the business. As the owners, they're the ones who should be informed of whether they have available resources or whether their assets are still working well for the business that they're operating. For instance, a convenience store, one of your assets, a 24-hour convenience store. You sell a lot of items, varied items, one of which perhaps would be ice cream. And then you found out that your cooler isn't actually working well. As the owner, you need to do something or else you will have lost so much. You are buying ice cream which you are reselling only to find out that you can't resell them properly because the asset, the cooler where they are stored isn't functioning well anymore. So owners need to know that information. Liabilities of the business. Owners also know how much they owe other entities or other companies. Or if
Mm.
they incurred loans or debts, they should know them because these payables, these liabilities mature at a given point in time. They should be settled or else the business will have to pay for the interest. If not, the business will not anymore be granted a chance to enjoy a liability. Liabilities can be enjoyed. Remember that question? I think that was a question in the SP. Are liabilities bad in a business? Remember that question? Liabilities are not all the while bad.
Debt or liabilities?
Debt,
Debt.
debt,
Debts
Debt,
or
debt,
debt?
debt.
sir, debt.
It's not debt, Nathan. It's debt.
Debt.
It's the same thing
Debt,
as
sir.
other. A debt is a liability. It's a payable. A debt is a payable. They're all
Um,
liabilities. So the question
yeah.
there is it all bad? Is it really bad to incur a debt or a liability? It's not actually all that bad. In
It's
fact,
not all. Well,
there are
it's,
starting businesses that go
mm,
with a loan, with a liability. Diba? So many businesses start with that because they project that when the business continues to run, hopefully they can pay for the liabilities or debts that they have incurred. As owners, you really need to know these information. If you also manage to have a healthy relationship with your creditor, then you'll be
buyer's credit.
these opportunities, you'll be enjoying these opportunities from time to time because you can assure your creditors that you can really pay them on or if not before the maturity date of the liabilities. Owners need these information for considerations regarding additional investment that especially has something to do with resources and assets. If the company has not been earning income or profit at all, then it's impractical to have an additional, it's impractical to venture on additional investment opportunities. If the company has not been earning profit, has not been incurring income, it's pointless to think of an expansion. An expansion is an additional investment opportunity. You see, expand the business. They also need these information for borrowing funds to support any expansion plans in relation to liabilities. Diba that's what I said earlier. If owners know their liabilities or if owners know the liabilities of their business, they would be guided on what policies they should consider in the settlement of these liabilities so that they could still borrow funds later on from other creditors. Information is presented to internal users, usually in the form of management accounts, budgets, forecasts, and financial statements. And they will support whatever decision of the internal users will have. If you have internal users, of course, you also have external users of accounting information. These are individuals and organizations outside of a company, but they are still involved with that same company. They may not be directly involved in managing and operating the business, but they have some effect to the business. They can contribute some form of effect to the business, as they may be potential investors or creditors. So we begin with creditors. These creditors need accounting information to determine the credit worthiness of an organization. It helps determine if the business should be granted that money or financial requirement, financial need that they need to borrow. Creditors will look into the documents, into the financial documents of a business. They will see how liquid or fluid that business is. If the business has poor cash reserves, then you can't really assure the creditor of developing or of giving you a yes in your business. Unless, of course, they could see on record, per record, that the business has good liquidity, has good cash inflow and outflow. Tax authorities. This also determines the credibility of the tax returns filed on behalf of a company. Tax authorities, or the business later on can free itself from any claim of any issues, any legal matters regarding tax, if tax authorities can clearly see the transparency of the business when it comes to its filing of tax returns. Another set of external users, you have investors. Of course, even if owners invest their own capital to the business, it might reach a point where you would ask for others to invest in your own company. The feasibility of investing in that company can be known from these accounting information. Transparency of accounting information would make investors decide to whether put in their money or not, or look for something else. Look for some other business out there where they could provide their investment. Lastly, no, not lastly, you also have customers. Of course, as customers, they need to know the financial position of its suppliers. As customers, they want to see if the company or the business that they've been patronizing still could cater to the needs, or if not, to their demands. You also have regulatory authorities such as the Securities and Exchange Commission or the Department of Labor and Employment. They make sure that the business follows the rules and regulations that have been set. These external users will look into the documents, into the accounting information of a business to make sure that standards, principles, rules, and regulations have been adhered by the business. If not, they will not be granted the chance to operate. I have just known of one. There's actually a store near. Now the store is operating again. But before, there came a period that that store has stopped its operation because there was someone from the Department of Labor and Employment who came and settled it with them that they will just have to stop the operations since they've been selling rice in sacks. And the selling of rice needs to have, other than the store permit or the permit for your store to operate, there's another permit now that you have to obtain in order for you to be granted the chance to sell rice, sacks of rice. That store owner near our house just decided to openly sell rice without getting that permit. Then surprisingly, they were told to close down because that choice of theirs was outside of the rules and regulations set by the Department of Labor and Employment. They sold rice, sacks of rice, without the permit. So see, the Department of Labor and
To
Employment
sir,
is an external user. Yes, Nathan?
putol ko.
Uh-huh.
It's choppy a bit.
Wait, the internet connection is unstable. How
Yeah,
about
choppy.
now? How about now? Hello?
Go.
Nicole, Nathan, can you hear me?
Choppy, sir. Choppy.
Choppy.
It's not that loud, sir.
Wait. What about now? What about now? Is it clear now?
Mahina, sir.
Hello?
Hello,
Hello?
sir.
Hello?
Hello, sir.
Low,
Hello?
sir.
Hello.
Wait,
Hello.
wait. Can you hear me?
Mahina, sir.
It deteriorates your voice, sir. Like, pag ganun, lower yun. Not, ano.
Hello? Hello?
Yes, sir.
There, is that better?
Mm.
Okay.
Yes, sir.
So I have to hold this. So there again, internal and external users. What about now?
Oh, sir.
Okay. What about in this manner?
Yes, sir.
Okay. Internal and external users, though they come from two different areas, like the internal users are within the company and the external users are outside of the company, they also play a reciprocating role in the life of a business. Take note, while the business is operating and running, it's also important for external users to have an idea of whether they should help, invest, or on how they would assess that business. And by the time these information are provided, when an external user provides these information, or yeah, when the external user provides this information, the internal user can then make better decisions. Like if a creditor would say, I think your financial records show that you are credible enough. So one of the internal users, perhaps the owner, could then make arrangements. So if my financial records prove that I am credit worthy, is it all right if I borrow this amount for the purpose of expansions? I hope you can see the relationship there. And since papers prove that the business is really credible, money is granted for borrowing, the business could expand. The business continues to operate. The business can continue its existence. It's just that internal users need these information to be more detailed and on a timely basis. There are just more important decisions in relation to the operation and running of a business that should be done. That's why internal users need more details of these information. They go into the specifics of the budget forecast, of financial statements. They look into them because they are more affected with how the business should operate. By the time there's a need to look into whether the business follows the rules and stipulations of the government, that's where the external users can come in. If there's a need now to see whether customers have been satisfied by what's provided, that's where the customers as external users would come in. Questions regarding users of accounting information?
No, sir.
Actually, the lesson is just this short. It's quite a short lesson. Nicole, wait for a while. I'll check the module that I give you. Are there questions that are replaced in the module? Okay. Please,
Yes, sir.
we'll work on those questions for
Yes, sir.
Thursday. Please go to your Edmodo page now.
Yes, sir.
So same thing as last time. I'll post some questions and your answers will be placed on the comments section.
Mag-answer, sir.
Yes, yes, yes. I'm still typing in the question.
Sir. Yeah.
There's already a question that I have posted, and type in your answers to that question. I'll type in the next question.
Comment, sir.
Oh, the comment section, yes, comment section. And I'll post in my third question. There will be three questions. There'll just be three questions this morning.
So A is in the X and A is the longest. And if you compare the values of your 25 and 16, 25 is bigger than 16, so therefore this is the value of your X squared, 25. And it is in the denominator of X, so therefore our graph is.
So there are three questions that I have placed. The first question is, where is it? Why do employees need to know some accounting information of a business? Second question, what do you mean by credit worthiness? Third, why is it important to consider government agencies as external users of accounting information?
How about this one?
Three questions, go.
The center in this problem is at, the formula is X minus H, Y minus K. So therefore, the center here goes with positive 3 and negative 2. It, so you graph that, the Cartesian plane, probably that is the fourth quadrant, positive 3 for X, negative 2 for Y. That is directly pulled out from the equation which is given. Now we are going to find the value of A and B. Notice that in the denominators, we have 25 and 16, and it is going to